All right. Good morning, everybody, and welcome to our live coaching session here on both Facebook and on YouTube. My name is Patrick France, Senior Instructor here at VectorVest, bringing you the Stock Advisory app, one of the most comprehensive trading apps out there. Glad to be with everybody this morning. If you guys can hear me out there, type in VV Nation in the chat. I see Drew's already typing that in. Good morning, Drew. Hopefully you're doing well. Hey there, Jay. Glad to hear Jockey Club was good, but Glenn, so welcome everybody. Hopefully everyone is doing well. Hopefully you guys are ready to learn, ready to find some stocks to help reduce some of that stress that you have if you're worried about what's going on in the market, especially with, the Fed minutes coming out yesterday. They're stating that they're going to be a little bit more aggressive with their trade or with their wind down of things and minimizing the balance sheet that they have. So if you're worried about that, you're in the right spot. We're going to help you find some stocks that'll help reduce some of that stress there. So welcome everybody. Hopefully everybody is doing well. A little less, there, Drew. You're right on point there this morning. Hey there, Jim. Good morning, Michael, David, Drew. Hopefully you guys are all doing well. Hopefully you guys are having a good morning so far. So for anybody new tuning in for the very first time, once again, my name is Patrick France. Welcome to our live coaching sessions we do here both on Facebook and on YouTube. And what we do is we cover the VectorVest Stock Advisory app and cover different tips and tricks, different ways to make money with this Stock Advisory app to help you guys make consistent money and stay on the right side of things. So welcome once again. Hopefully everybody's doing well. I'm letting everybody kind of come in here this morning. Hey there, Martin, Nassif. Hopefully you guys are having a good morning so far. Bonjour, Natalie, or Nathale. And with that, would you say the markets are fragile? Yes, I would, Jay. All right, so hopefully everyone is ready to learn here today, ready to see some different ideas that we haven't talked about in a while and learn how to make money in the market. So as always, if you're brand new, what we typically do is we start to take a look at what's going on in the market here today. Then we dive into our topic of discussion where we're going to be looking for stocks with higher safety or less risk, whichever way, fits you better. And then as always, we'll save the very end, or we'll save till the very end the fan favorite, where if you want to see your own stocks analyzed through the VectorVest system, make sure to stick around towards that point and we'll analyze any stock in less than 10 seconds. So with that, let's go ahead, jump right into it here today, take a look at what's going on and start to get into it. So as always, right now, taking a look at the market timing gauge, starting off at the very top center. As we can see, we are 3 ticks into the red, continuing from yesterday's downturn. Therefore, the color guard is bearish and VectorVest does not advocate buying any stocks at this time. As always, if you ever want to see a update on what happened for the day, what to expect for tomorrow, what news you need to be aware of, make sure to check out the daily color guard report found right here inside the app every single night, where we cover all of that information to make sure that you never get caught off guard with what's going on in the market. And then as we scroll down just a little bit, taking a look at the daily color guard report, or the color guard itself, and we get 3 columns here that we have different colored lights. Now, these 3 columns we use to help identify what's going on in the overall market. And we track the overall market for 3 main components. The first off here is the price, which is looking at the price of the VectorVest composite. Now, the VectorVest composite is an arithmetic indexed average of about 9,100 stocks out there. So it's not, just looking at the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at 9,100 stocks. So therefore, it gives you a better representation on what's actually going on in the markets. As we can see, it's red here today since we're lower day over day and also week over week. Looking at the RT is looking at, or stands for the relative timing, and it's looking at the short-term price trend of the market. It's cast on a scale of 0 to 2, so if it's above 1, the short-term trend would be up. Below 1, as it is now, the short-term trend of the market is down. And since it's red, that tells us, once again, it's moving lower day over day and week over week. Then looking at the BSR, or the buy to sell ratio, this is looking at the overall health of the market. So every single day, VectorVest gives a buy, hold, and sell rating on every single stock. Well, we take that ratio between the buys and sells to identify the overall health. So if there's more buys and sells, that would indicate overall market strength. And if there's more sells than buys, the buy to sell ratio would be below 1, as it is now, which indicates overall market weakness. So therefore, and as you can see, it's red. So that indicates it's moving lower once again, day over day and week over week. So the trends of these three indicators are comprised to come up with our MTI or our market timing indicator. This is going to be cast on a scale of 0 to 2, and above 1 indicates that the underlying trend of the market is up. Below 1, the underlying trend of the market is down. So at 0.88, as we can see, no surprise there, the underlying trend of the market is down. Then we get to our trend column, and typically the trend shows two parts, as you can see from the prior day or April 6th, where we show the short-term or weekly trend of the market, which is what we like to call the primary wave, also the underlying trend of the market. As we can see, we are potentially going to be getting a confirmed down signal, which we'll talk about here in a second. As of today, if the markets don't start improving, so therefore that tells us both the primary wave and the underlying trend of the market are down currently as well. And then that last column we're going to be talking about is the calls column, which stands for confirmed calls. Now our confirmed calls are our most conservative timing system here. They're our last signal we get to get in and our last signal we get to get out. As we just mentioned, we've been in a confirmed up situation for a few weeks now, but we are getting very, very close to potentially receiving a confirmed down or getting a reverse signal as of today. If the markets don't start improving, we could potentially see that signal changing by the end of the day. But as always, to get that official signal, the markets have to close out in that direction before we can say it's an official confirmed down situation. So right now, we're on that borderline, but not... we haven't closed, the markets haven't closed yet, so still something could happen by the end of the day. But for right now, we're getting pretty close to that confirmed down situation. Let's see. What can you tell me about Mullen Automotive? They are a car dealer, or they're a car manufacturer, I take it. I know there's a lot of talk about it. I don't personally follow it, but thanks for the question. Does the BSR change only once per day? So Tyler, if you're using the app, everything, as you can see at the very top, is delayed on a 15-minute delay. So it's streaming, so it's tick by tick just on a 15-minute delay. So if there's any changes, you will see that change throughout the session here as well. All right, so as we come down, taking a look at the advanced declines, as always, we always recommend to take a look at the advanced declines on a daily basis. If you're looking for a good day to buy, you want to see a 2-to-1 ratio on the advances to declines. If you're looking to take advantage of the market to the downside, then you want to see just the opposite, a 2-to-1 ratio decliners to advances. So right now we currently have that. The decliners are sitting at 61%, the advances are sitting at 26%. So well over that 2-to-1 ratio. Therefore, if you're going to be opening up a position, the advanced to declines indicates, especially when you match up the colors that we see here at the top, that we should be placing a bearish trade here today more so than a bullish trade if you're going to be placing a trade at all right now. And then last but not least, we want to take a look at the major indices here, where the Dow is down about 0.7%, NASDAQ's down about 0.3%, S&P also down about 0.3%, VectorVest Composite down about 0.4% so far. Also, good morning, Keith. Glad to have you here over on our Facebook side. Hopefully you're doing well this morning. All right, so with that, that kind of summarizes what we're seeing in the markets right now. And with that, that brings a lot of fear, especially when you have the Fed becoming more hawkish, stating that they're going to start unwinding their balance sheet faster, going to start raising interest rates quicker. So they've changed their stance from looking or focusing on max employment to dealing with inflation, or trying to cool down inflation, if you will. And that came at a little bit quicker of a pace than most people were expecting, and we've seen the markets reacting negatively. Well, actually, if you're watching us live yesterday with Glenn and I, we were talking about it as the minutes got released. We saw the market start to rally a little bit, but then slowly faded going into the close. And so we saw a little bit of hope, but at the same time, the overall sentiment seemed more bearish than bullish by the end of the day yesterday. So if you're worried about that, then what better opportunity to look at than stocks with high safety, stocks with consistent fundamentals that are consistently making money, because those are the stocks that you can go into and rest easy at night knowing that your stocks are not going to be the ones that drop 10-20% overnight. So VectorVest makes finding those stocks pretty easy. To do that, what we're going to do is we're going to jump into the stock pick ideas, or we could go to premium watch list, whichever one. We'll go to stock pick ideas for now. And I may have left it on too long. Give me 1 second here. Let's go back to it. I got to re-sign back in. There we go. Perfect. Give me one moment on that one. There we go. All right, so instead, actually, we're going to go to the premium watch list because there's a lot of great watch lists that you can find, some really great candidates here. So just wanted to bring that to attention as well. And before we jump into it, Larry does have a question. What does the asterisk mean on the color guard? So that asterisk, just briefly, we'll jump back into it. The asterisk you see here in that green light, for example, indicates the RT time or RT kicker timing system we have here. It's a great system to play the markets both up and down. And if you see that little asterisk there, that just indicates the short-term momentum in favor of that signal. So when you saw the green light, that means we're higher day over day, week over week, plus the short-term momentum is still in favor of the upside. If we saw a red light with that asterisk, that would indicate the market is moving lower day over day and week over week, plus short-term momentum is favoring the downside as well. So as always though, every single night we cover that for you in the daily color guard report. So make sure to check that out, get familiar with it because we cover all those signals for you and get you more comfortable with what you're seeing and how to interpret it. So that way you can become a better and smarter investor overall. So you're welcome, Larry. All right, so let's go back into the premium watch list. And what we're going to do is we're going to scroll down here and looking for the safest stocks with buy ratings at the very bottom. Blurry, not clear picture. Bradford, if you're having any issues with the quality there, make sure to refresh your page or click on that little gear in the bottom right-hand corner of the video. You can change your resolution settings from there. All right, so safest stocks with buy ratings. What we're looking at is the stocks with the highest RS indicators. If you're not familiar with our indicators, if you're new to VectorVest, or maybe you're just interested in wanting to see more about VectorVest, the RS stands for relative safety. The relative safety is looking at the consistency and the predictability of a company's financial performance. It basically states that, the companies that are growing their earnings quarter over quarter, year over year, meaning they're making money and they're growing the money that they're making, have less risk associated with them. Because as we always talk about, earnings are earnings are going to be the main engine that drives stock prices higher over time. So if you're looking at stocks that have good, strong fundamental earnings, then you can expect to see those continue to grow, regardless of the overall macro scale or sphere that we're dealing with right now. Let's see. Appreciate that there, Jay. All right, so markets are red right now. We know we're 3 ticks into the red, but look at these stocks. They're all up. They all have a buy rating. They're all doing pretty well, even with a pretty ugly market that we're in right now. So let's take a look. UNH, United Healthcare. As we can see, looking at the 4 indicators at the bottom, as always, we should start analyzing the stock down here at the bottom before we jump in to take a look at the graph. Make sure the stock meets the criteria you're looking for first before moving to that next step of looking at that graph there. So starting off with the RV or the relative value, this is looking at the long-term potential over the next 1 to 3 years. And all 4 of these indicators being on scales 0 to 2, above 1 is good, below 1 is bad. So at 1.38, that tells us we have good long-term potential over the next 1 to 3 years of this stock. Looking at the RS or that relative safety factor, once again, the consistency and the predictability of their financial performance. Basically though, all you have to remember is it's an indicator of risk. So the higher above 1 it is, the less risk associated with it. The lower below 1 it is, that means the more risk associated with it. Well, 1.47, pretty high on the relative safety scale. And I think we can see it's doing its job right now, even with what's going on in the overall markets. Then the third indicator is that timing or technical indicator. It's the RT or relative timing, and it's looking at the short-term price trend of the equity here. So cast on a scale of 0 to 2, above 1 tells us this one is in an uptrend currently. So overall, the VST, looking at all 3 comprised into 1, definitely tells us this stock is favorable. Looking at it, we all know what the markets have been doing over the last few weeks or last few months even, and they haven't been great. Well, we take a look at the last, let's say, 1 year. UNH has been able to continue to move higher, and yes, it's had a little bit of volatility, but overall, moving from the bottom left to the upper right, pretty much like a stair-step pattern, and that's what you want to see. nice consistent rises, even in the face of overall market fears out there. This stock has still been able to thrive, and that's exactly what you want in a portfolio, because if it can handle that kind of situation, when the market starts getting back on track, starts to move higher, you can expect this stock to thrive even more so at that point. One thing I will do, I'm going to go down to the graph settings here at the bottom, and I'm going to change the lower indicator because we're not really looking for technical short-term plays today. We're looking for more of that longer-term, safer, consistent play. So what we're going to do is we're going to add EPS here, go back and look at that EPS, steadily rising from bottom left to upper right, telling us the company has been growing their earnings, making money, and continuing to make money. And also, the great thing about looking at the VectorVest earnings is it doesn't just look at, the historical numbers like everywhere else out there, but it also takes into account a 12-month forecasted earnings per share as well. So if you see it continuing to rise, that tells us not only has this company been making money, but the big money out there and the analysts out there are expecting to see this company continuing to make money 12 months down the road. And that's important because, as we know, wherever the big money goes is where the stocks continue to rise at. So you want to see a good potential future for the company as well. And looking at it, earnings been steadily rising, price moving along right along with that there. All right, so let's go ahead, take a look at the next one. WST for West Pharmaceuticals, breaking down the analysis first and foremost. Good long-term potential, less risk associated with it. You're in a consistent uptrend. Overall, stock is favorable. Take a look at the graph real fast. This one hasn't performed quite as well as what we saw with the last one. We can see it has, moved sideways a little bit, pulled back a little bit, but now starting to move higher. And even with the markets pulling back the last few days, this one's actually started picking back up. So looking at earnings as well, earnings continuing to rise tells us the stock is making money, and big money is expecting to see it continue to make money 12 months down the road. Looking at it here, you do have a resistance right around 420 a share. So if you're more of a technical trader or looking to time it just right, may wait to see it break that 420 level. But overall, the company's in good hands, company's making money, and that's, as the old saying goes, money goes where money grows. So jumping out of this one, taking a look at the next one. REGN. REGN has great long-term potential, less risk associated with it. It's in a consistent, steady uptrend. Overall, the stock is definitely favorable. So once again, keep in mind what's going on in the market right now. This stock still up 1.5% here today. And looking at it, the market started really selling off in November, which was right about there. So since that point, the stock moves sideways rather than dropping 20, 30, 40% like we've seen a lot of major names do. And now the markets, so it's holding its own. And now that the markets are starting to pick back up a little bit off of those lows, this stock has really continued to thrive here. So that is exactly what you want to have. If you're worried about what's going on in the markets and you don't really want to be in and out constantly, you're looking for something that you can add to your portfolio, maybe check on it once a day and not worry every single night going to bed what my portfolio is going to be doing in the morning, then these are great opportunities to take advantage of. Also, if we take a look, I'm not sure if this one does or not, but some of these stocks even pay dividends, which could be an extra bonus for you to help, supplement it in that sideways move there. REGN is Dr. D's favorite stock. Yeah, REGN is a very good name, and it's been a top name for quite some time. All right, let's see. What else do we have here? Going down, you're going to find some other bigger names. Costco, one name that hasn't been talked about for a while, but this one, good long-term potential, really solid, consistent fundamentals, so less risk associated with it. Timing, a little bit stronger. So you see you're giving up some of that safety, not as high as safety as some of the top ones here. The long-term potential is about average, but looking at the timing, you're seeing a lot of momentum behind it currently. Pulling it up, looking at November, this one, you had a little bit of a drop here from roughly the beginning of the year until the end of, from the beginning of December until January. But since that point, the market was continuing to move lower, and this one now hitting fresh new highs here. Looking at the earnings are steadily rising. It's why we say time and time again, earnings are the engine that drives stock prices higher over time. I see a lot of people talking out there, oh, earnings don't mean anything anymore. That's an old school way of thinking. And there's a reason why VectorVest has been around for well over 30 years. It's because it works. Dr. Delito and the founder of the VectorVest software knows what he's doing. He's spent a lot of time in the markets as an individual investor first and foremost, learned from that, and then created what we have here. And earnings, as he says, is the engine that drives stock prices higher. So therefore, regardless of what, some may think out there, because, we've been in such a long bull market, everybody thinks they're the greatest stock picking wizard when the markets just consistently go higher. But when you have worries like this and you have this volatility that we've experienced and these sell-offs that we've experienced, it's time to get back to fundamentals, and it's time to get back to something that has a proven track record. So stick with what works, and we've been time tested to know that this stuff works. That's why you have to listen in, and that's why you guys tune in every single week. Concerned about price higher than value. So if you're concerned about that, Roy, and that's a personal decision. Personally, I'm not too worried about having an overvalued stock, but I understand that there is that, that desire to have an undervalued stock. Well, simply come down here. You see right here on that second line under the extended data, it tells you overvalued. So if you're not looking for an overvalued stock, if you want to make sure the stock is undervalued, then only stick with ones that say undervalued. Scrolling down, okay, that's overvalued. Coming down, keep going down the list and just use that as your filter. Here we go. So MOH, good long-term potential, less risk associated with it, nice, consistent, strong uptrend. Overall, the stock is favorable and it's undervalued currently. There you go. Let's take a look at the graph of this one. Markets, we know what they've been doing. We'll go take a look at them here in a second, but look at this one. Nice steady rise over the course of the last year. Nice steady rise from bottom left to upper right. Yes, it had a little bit of a pullback, but not nearly the same amount or magnitude that we've seen with the vast majority of other stocks out there. Looking at earnings are steadily rising from bottom left to upper right as well, telling us the company is making money and they're expected to continue to make money 1 year down the road. And that's important. Always keep that in mind. So now that we've seen how good some of these stocks have done, one thing to keep in mind, this is a little bit different than your typical watch list. If you notice at the very top, it says rank by. Rank by RS. Once again, that relative safety indicator. So it automatically brings the highest relative safety stocks to the top of the list for you. So you can start at the top. That's going to be the safest stocks out there. And as you scroll down, just because you see a little bit less of an RS rating doesn't mean it's a bad pick. It just means that, it's not quite as good as the one, it doesn't have quite the highest safety as the one prior to it, but it still has pretty good safety overall. So, just because you see one further down the list doesn't mean it's a bad play. All of these are great opportunities here. And as you were stating, looking for stocks that, are undervalued could be a consideration. So you could use that as your own personal filter to go through these and make sure that these stocks are undervalued. If you see it overvalued, just simply move on. There's plenty of great opportunities here. No need to, settle for one if you're not comfortable with it, if it doesn't meet your own criteria. All right. So that's going to be mainly it so far for the day. You have names such as Tesla coming in here, AutoZone. I talked about yesterday, Advanced Auto Parts, AAP, AutoZone, another great opportunity, similar play for anybody who was trading back, before the 08 crash that we had. During that time frame, what stocks did well? Companies like Dollar General, because people were going to the cheapest places they could find to buy their basic necessities. People were also not trading in their cars and not buying new cars. They were keeping the cars that they had and doing a lot of the maintenance on their own. So Advanced Auto Parts or AutoZone are also great opportunities. Now, Advanced Auto Parts is a lot cheaper. It's only about $150 a share roughly, if I recall correctly, whereas AutoZone is $2,000 a share. So, you could take that or do with that with what you will, but, either one of them would be really good opportunities to consider if you're worried about, that we're heading in for another recession right now. All right. So any questions that you guys have so far? Any stocks in this list that, either you guys are currently holding or that you guys, may not have been familiar with, but see as an interesting look right now? Curious to see your guys' thoughts on it. All right. But while we're waiting on those, O'Reilly, same situation we've just been talking about with Advanced Auto Parts and AutoZone. BWV is insane. Is BWV, where is it? I may have missed that. I don't see BWV in this list, so may not meet the criteria that we're looking for here today. If it's a high flyer, definitely not going to be in here. Jim's saying ANTM. He has ANTM. Where's that one? Let's go ahead, locate that. ANTM. ANTM, great long-term potential, less risk associated with it, nice consistent uptrend. Overall, the stock is favorable. Stock is undervalued, so there you go, Roy, meeting your undervalued criteria. Looking at the chart here, since November, it's done nothing but consistently move higher. Type in 1 in the chat if you guys would like to have held this stock through the month of November rather than some of the stocks you've had in your portfolio. Who wouldn't want to own a stock like this through the market conditions that we've seen over the last, what are we coming up on? Almost 6 months here. What about Napa? We can take a look at Napa, Tony. Seeing a lot of ones coming in now. And that's exactly right. I don't think anybody would disagree that this would be a great stock to be keeping in your portfolio. You could rest easy at night, not worrying so much about it, not worrying if it's going to be like Facebook and drop 30% after a bad earnings performance. These are the kind of stocks that, once again, give you that peace of mind so that way you can enjoy the rest. You can enjoy your days and not constantly worry about your portfolio 24/7. I have a question. Recorded your YouTube channel? Yes, Vince. All of our streams are always on replay there on our YouTube channel as well as our Facebook page after the stream is over. Martin's saying he owns Bro. Let's go take a look at Bro. I saw that in here a few moments ago. Brown and Brown. So markets are down, but right now Bro's down about 0.25%. We can all handle that. 0.25% down is not a big movement either way. RV, good long-term potential, less risk associated with it. Stock is in an uptrend. Overall, stock is definitely favorable. It is overvalued, but once again, that's a personal preference. Just because a stock is overvalued doesn't mean it's a bad thing or a bad play. It just means that you're paying a premium for it at the time, and doesn't mean that you can't make money in that stock. Looking at the chart has been consistently moving higher. You did have a little bit of a sideways move for the last couple of months, but definitely not the kind of drops that we've seen with some of the big tech names. And then now consistently moving higher back up to new one-year highs here. Earnings steadily rising from bottom left to upper right. Exactly what you want to see. And if you've noticed, I'm not getting into a whole bunch of technical analysis. I'm not, getting into all these different things. I'm keeping it simple. And if you're looking for these kind of stocks, this is the best approach, is to keep it simple. Looking for stocks that have a nice consistent bottom left to upper right pattern in price, and also looking at the earnings moving from bottom left to upper right like a stair-step pattern. That's as hard as we need to make it. Dave is saying, thinking of buying C&Q. I saw it in here a second ago. Let's find it real fast. C&Q. CNC. Maybe that's what I saw here. C&Q further down the list. And as you can see, there's a lot of stocks in here. So once again, no need to settle for the very top one. If that doesn't meet your criteria, simply scroll down. There's going to be more opportunities to find that do meet your criteria you're looking for. So I don't see C&Q in this list here. As you can see, there's a lot of stocks in the list as well. Yeah, so I don't see C&Q meeting that criteria, but here, Dollar General. This is one I brought up yesterday during our live stream. But as you can see, okay long-term potential, but less risk associated with it. Nice, consistent, strong uptrend. You can see though, RS is at 1.18. The top ones we were looking at had an RS of 1.47, close to that 1.5 range. Looking at the graph here, you can definitely see the difference between that RS rating. See a lot more volatility in Dollar General. Once again though, Dollar General is going to be more of that specific condition play. So, if we do start moving into a recession, then this could be an interesting one to add to your portfolio or add into your shopping list. One thing I will say just from a technical standpoint, you do have this level of resistance right around 240. You've had it hit once, twice, 3 times here. So you have almost a triple top. If we break above that, that could create a great run coming into Dollar General here. So definitely one to keep on our radar. All right, so with that, let's go ahead, start to take a look at stocks that you guys are interested in. I see some names already coming in. So as I mentioned to Tony a second ago, we'll take a look at Napa. So Napa will start us off. If you guys have other stocks you want to take a look at, start putting them in the chat so far. Also, I see we have well over 100 people already here today or in here today and only 24 likes. So if you guys are enjoying this, if you guys have found some new trading ideas that you guys are interested in, make sure to smash that like button right now. All of that helps us out with the YouTube algorithms and continues to grow this amazing community that we built here, the VV Nation community. We couldn't be here doing this today without you guys. And so without your support, we need your support to keep these things going. So if you guys are enjoying yourself, make sure, as always, smash that like button, subscribe to the channel if you're not already subscribed, and join the VV Nation community here. All right, so Napa, NAPA. Why am I not finding it? Napa. I know it's not Duckhorn. Oh, you want to take a look at Napa? Let's see. Napa as a stock, or Napa as like Napa Auto Parts? Tony, let me make sure I'm understanding you correctly, because I see you capitalize NAP or NAPA. So I want to make sure I'm looking at the right thing here for you. Glad to have you here, John. As always, a pleasure. All right, so we'll take a look at Napa while I'm waiting for those that feedback there. But looking at Napa right now, this is a speculative play. You have poor long-term potential. You have a lot of risk associated with it. You have a consistent downtrend right now. So overall, the stock is not favorable. With the current environment, if you're trying to be less, or if you're trying to be risk off, then this is not a stock you want to have in your portfolio. The auto parts source. So that's what I was thinking. NAP. Let me see here. NAPA. Where is it? Why am I not finding it? Am I missing something here? Auto. Let's see if it's under auto. Did they change symbols or did they get bought out? I'm looking for it, but I'm not seeing it. Penske. Going through the list, trying to find it here. Did they change symbols there? It's part of Duckhorn portfolio. Maybe. I'm gonna have to look into that one there, Tony, because I remember a long time ago that was a symbol, but maybe not anymore. All right, ZIM. There we go. So ZIM, good long-term potential, but does have a little bit more risk associated with it. Even with the sell-off, you're still in an uptrend on a short-term basis. Overall, the stock is favorable. Compared to what the market's doing, only down about 0.25%. Not bad there. But, right now, keep an eye on that RT there. IPI, Potash, good long-term potential, about average risk associated with it. This is a momentum play right now. RT at 2.0, clearly a momentum play right now. Overall, definitely favorable. WEBS. So with an ETF, VectorVest makes analyzing it extremely easy because they don't have quarterly earnings. They don't have balance sheets that you have to go through. So therefore, the RV and RS are always going to be pegged at 1. Whenever looking at an ETF, the main indicator you have to focus on is RT at 0.74. That tells us it is in a decline currently on a short-term basis. Therefore, not favorable currently. Let's see, MUSA. Murphy Auto or Murphy USA. So Murphy's good long-term potential, less risk associated with it, strong uptrend. Overall, stock is definitely favorable. Yeah, Michael, we talked about that at the beginning here. Napa. Okay, there we go. Napa is part of GPC. So let's see, genuine parts. Okay, so good long-term potential, about average risk associated with it. You're in a slight decline currently. So overall, the stock is good, but basically average right now. Out of the different auto part suppliers, probably better opportunities out there currently. IDEX, let's see. IDEX, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable. I don't know if there's any news on it, but this is a speculative play, so be careful of that one. Let's see what else we got here today. NXE, poor long-term potential, a lot of risk associated with it. So telling us it's a speculative play currently. You are in a really strong short-term uptrend. So this is a momentum player. This is a, quick in and out type of trade. Overall, it's favorable because of that timing, but not for the faint of heart, to say the least. Let's see, OXY. Great long-term potential, about average risk associated with it. Really strong short-term uptrend. Overall, stock is definitely favorable. Let's see, DRIP, DRIP. So DRIP, looking at the RT, 0.23, it is in a strong decline currently, so overall, not favorable. Let's see, AATC. AATC, good long-term potential, but a lot of risk to get to that potential. You're in a steady decline currently. Overall, stock is not favorable here. TECK, good long-term potential, but a little bit more risk than the average stock out there, and a pretty steady uptrend. Overall, favorable currently. Let's see. Crocs, CROX. Crocs, good long-term potential, about average risk associated with it. You're in a steady decline though. Overall, stock's about average. Especially with that timing, we'd be staying away from it right now. But this goes to show, RS at 0.99, well below what we were seeing with some of the other candidates we were looking at here today. And you can see in the price action what happens at that point. So that's why RS, if you're worried about the market, worried about the conditions of the market, and worried about what the market's going to hold going forward for us, look at the relative safety indicator, folks. It's a great way to help bring peace of mind to your portfolio there. Let's see what else we have. ARCB, let's go ahead, take a look. Good long-term potential, less risk associated with it. However, not the right time to be long in it. Overall, it's a good stock because it has good fundamentals, but not the right time to be holding it long. All right, let's see what else we have. Appreciate the review. SM. Good long-term potential, but a little bit more risk out there, telling us this is more of an aggressive play currently. It has a pretty good uptrend currently, so overall the stock is favorable. Just be careful though with that risk factor. And as we can see, Thomas coming in as a new member of the VV Nation. Welcome, Thomas. Glad to have you here. All right, let's see. ICL. And as again, folks, help us out. Continue. If you guys are enjoying yourselves here today, make sure to smash that like button. Subscribe if you're not already subscribed. Help us continue to grow this awesome community here on our YouTube channel and also on our Facebook page as well. All right, so looking at ICL, good long-term potential, but a little bit more risk associated with it here. You have a really strong short-term uptrend, so you have an aggressive stock with a short-term strong uptrend. So overall, the stock is favorable. Let's see, TROW, good long-term potential, less risk associated with it, However, not the right time to be long in it. Overall, strong fundamentals, so it's a good stock, just not the right timing on it. MACD or McDonald's, good long-term potential, less risk associated with it. You are in a slight uptrend. Overall, the stock's favorable, but realistically, when we look at RT, we want to see 1.1 or more typically, which would indicate, the stock's not really just treading water. The stock actually has some movement to the upside there. Let's see, EOG. Great long-term potential, less risk associated with it, a nice steady uptrend. So overall, stock is definitely favorable. Good day, Lucky. Hopefully you're doing well. Let's see what else we have. Is this OXY? Ron, what stock are you talking about? Trying to find what stock you're talking about there. HD, Home Depot. Let's go take a look. Home Depot, good long-term potential, has good safety. However, the timing is off. The timing has been steadily drifting lower. Overall, strong fundamentals, just not the right time to be long in it. Let's see. And also, if you look at it, 1.31, pretty strong RS rating, but not as high as what we were seeing with some of those safest stocks with the buy ratings there. TK, let's go take a look at TK. TK, good long-term potential, but a lot of risk associated with it. You're in a slight uptrend, so overall the stock's about average currently. All right, and we'll do a couple more here for the day. So let's go ahead. I see a lot of people still asking for Costco. We'll go back and revisit Costco. So Costco, average long-term potential, but really consistent fundamentals, so less risk associated with it. You have a really nice, strong uptrend, so overall the stock is definitely favorable. All right, we'll do two more for the day. So we'll do PFE. PFE, great long-term potential, less risk associated with it, steady, consistent uptrend. Overall, stock is definitely favorable. And last but not least, MOS. MOS, glad to have you here, Maria. Hopefully you're doing well here today. So MOS, great long-term potential, but you do have a lot of risk associated with it. You are in a really strong short-term uptrend, so overall the stock is favorable. Once again, this is a more aggressive play and with a really strong momentum push to it. So take advantage of it while you can, but be careful with, the pullbacks, because what goes up that quickly can definitely come down that quickly as well. So Jim, I'm not trying to spoil anything, but let's just say there has been some talks about it. Something's in the works, but I can't give any info on it now. But yeah, I like where your head's at, and great minds think alike. So I'll leave it at that. All right, and let's go ahead, take a look at the homepage, see where the markets are at now. Right now, we're still 3 ticks into the red. As we scroll down, coming down, the Dow is down about 0.6%. NASDAQ actually getting worse, now down just shy of 0.6%. S&P's kind of hanging in there right now, down about 1/3%. VectorVest Composite now down over 0.5%. Looking at the advanced declines, the advances are now sitting at about 25%, where they were sitting about 26% earlier, and the decliners are now sitting at 64%. So we are seeing the market continuing to sell off here and getting stronger to the downside, giving us less hope or less optimistic signs that we're going to see that confirmed up call stick here today. So if things continue the way they're heading, we most likely will see it confirmed down by the end of the day. So keep an eye on the color guard today, especially, follow the daily color guard report tonight for your guidance going forward with this. So on that, it's been my pleasure being with you guys. I hope you guys have had a great day. As always, if you're just tuning in, I apologize. You can always go back and watch the replays here. Also, we do have Glenn Tompkins coming in with Trending Thursdays at 2 p.m. here today. So make sure to come back later, check him out if you want to see all the major headlines that are impacting the markets. And if you haven't already, as I've stated in the past, smash that like button, subscribe if you're not already subscribed, so that way you can stay up to date. Click on that little notification bell to stay up to date with all the live content we have coming out for you, and also all of our updated content that we have coming out for you on a daily basis there as well. So until next time, take care, be safe out there, let the trend be your friend, and Toodles.